back, everybody. Your typical bull here, and today we're going to talk about how to day trade triangles and wedges. Pretty simple pattern, also very profitable pattern, very easy to recognize, so it's a great way for beginners to get into day trading, and it does require a lot of patience though, so that is kind of key here. You have to be patient. So with that being said, let's get right into it, but don't forget to smash the like button and click subscribe. Your support really helps the channel to grow, and it is appreciated. So right out of the gates, what is a triangle? So basically a triangle is exactly like it sounds. A stock trades in a wide range, and a range gets smaller as it goes through. So what will happen is basically it looks kind of like this. So think of it kind of like a spring that's coiling, and then eventually that spring needs to release that energy, and it'll either break up or that spring will release energy and break down. So at this point of this breakout, you can create a low risk, high reward trade, right? So what you can do is buy right here on the breakout and stops just below it, and then target previous structure highs, or short here on the breakdown and then target previous structure lows. It's a fairly simple strategy. Same thing with a wedge, which is just a bit different than a triangle. So a wedge, generally you'll have either this, and it won't be quite as clean, right? So, but it will be pretty similar, right, to a triangle, and you can trade this exactly the same way. A wedge will either be this way, sort of this pattern here, but it's the same concept. Think of it like a spring that continues to tightly consolidate, and then eventually it'll either break up, getting you an entry here with a risk there, or it'll break down. So let's use some actual examples here now, right? So right off the gate, we're looking at Delta Airlines. Here is a triangle. I'm looking at a 1 minute chart, and at this point right here, you can tell that this pattern is forming, right? You have this series of lower highs and a series of higher lows. That basically tells you you are trading in a range that's getting smaller and smaller. And I have the VWAP on the chart because the VWAP helps me to determine direction, as well as pick my side here, really. Go ahead. So there's two ways to go about entering these trades. So if you're short biased, you can enter ahead of time on the rejections from these locations here. If you're long biased, you can enter ahead of time on these. And if I happen to get in early enough, what I'll do is if I had got long here, right, at let's say this point with a stop here, I would probably exit part of my trade here and then let the rest of it run, anticipating that this would break up. So if I hadn't done that, and I'm already realizing that I'm this part tight into the consolidation, what I would do instead is just wait for that breakout to actually happen and adjust these things as we go here. And then what ends up happening, if you had got long here based off of this, you would have taken a small stop, but then you get this very clear breakdown, right? So you break through, you pop up and retest these levels again right in here, and then you fall below VWAP, retest VWAP. You can create a very good entry here, right? So stops right above this, you either enter here below VWAP or enter at this retest, right? And then of course target 1 is the retest of this structure here, and then target 2 is probably a chart-based target here, right? So pop, get out right here after this trend breaks. Pretty simple. Let's go look at some more. Let's see if there's any more here. Here's a little mini triangle, I guess you'd call it, in this location. Same concept. You've got sort of this forming here, same thing, breaks down, retests, entry, stop, previous structure here, target 1, target 2's down here. Don't Actually, you don't hit target 2 by the end of the day, but you do get a little bit more out of that trade. Same story there. This is a pretty simple pattern. Here is another triangle here at open. You break down and you start trading in this range here. Triangle here. This one breaks up. You get a pullback, so if you're a pullback trader, you can enter here off of this. And if you are not a pullback trader, just enter on that breakout candle. Right, so let me actually clean this up a little bit and we'll talk about what's going on here. So this breaks down pretty hard at open, and then you start consolidating very tightly. You can see that this is sort of your triangle pattern right here. Right in here is probably what I would have had marked. And it doesn't quite break down below, but if you look here at your volume bars, you're trading at high volume, high volume, high volume. You're tapering down steadily. And these two breakout bars, you get a nice spike in volume, a pullback with low volume, and then volume steady starts to taper higher. And look where volume starts to fall off here, right at the end of that trend. So as soon as this is about to reverse, volume is tapering, and then it reverses. So, but what you get here is a trade from this area, stops here. Here is target 1, which is where you get your first pullback. Target 2 is here, and you hit both of those. So you get a trade from 30.35 to about 31.10-ish, probably, would be my best guess. If you're trading based on chart patterns, you exit at the next candle to close at a new low. So that would be this guy here, around in here somewhere, right? So previous structure highs. Good trade. Let's see if we can find some more here. If you adjust this same line here, you get a longer term wedge play right in here. Same concept, not quite a triangle, but we pop up, sit on top of that, and then break out. Look at the volume on your breakouts. See how, notice how high the volume is here. So what you get, entry, stop loss, and then this case there are no previous market highs. So what you have to do is use your chart patterns, right? So at this location right here, when you start consolidating sideways and then close with a new low, that's where you get out. And don't be sad that you missed a little bit more of a move. It's not a big deal. Here is another one right here. Same thing. This one is also sort of a little wedge, triangle. Same thing. Consolidating, tight consolidation, tight consolidation, tight consolidation. Look at the volume on the breakdown. Tapering up very high. And then entry, stop loss. And then target, of course, here is VWAP. You don't make a new 5-minute high until you actually get to VWAP here. So that's another good trade intraday. And then we don't make another one until the end of the day. Now, see if I can find some more. This just trends down all day long. Here's a good one here. Same thing. This one's sort of a bit longer of a consolidation. This is why you have to be patient. And in this scenario here, right, if you're bearish on the whole day, which this day was a day that the market was trending lower pretty well all day, this is kind of the scenario where you can short at these locations. And then maybe if you just get short at one of these locations, so let's just assume that here you take a small position, right? And you can take it off here, or you can add it more to it on the breakdown here. Look down here again at the volume on the breakdown. See that volume spike on the breakdown? And then 5-minute candle makes a new high, or new candle is chart pattern stuff, right? So you can use a 5-minute candle, you can do 1-minute candles, but if you're using the 1-minute candles, just understand you need to be very, very patient with these and let them form. And sometimes they just won't, right? So sometimes you'll think you have a triangle forming, and then it'll just break one direction or the other before you can actually get everything sorted out. But it's a pretty simple pattern to trade, right? Let's see if we can find some more. Okay, let's do a real world example. I'm going to take you to a trade that I took today, AMD. This was taken, that's not right, AMD, Advanced Micro Devices. I took this trade today, but I took it on a 5-minute chart. This one is just sort of an example of a wedge, right? So what happened here is we're trading above VWAP, and it was close to the end of the day, and it was just steady grinding higher, steady grinding higher. I just took an entry here with a stop loss here, and then I exited the full trade right there and got about, I don't know what, 109.75 to 110.90, a little over $1, which was totally fine for me being this late in the day. This market hasn't been following through as well as it should lately, but any of these, probably not that one or that one, this would have been a good trade. This was a good trade. This was a good trade. And when you have these ranges, you can have, if your market is bullish, which the whole market today was bullish, so I was only looking at longs, at this point, this third test here, you know that this trend is valid, and you also know at 1, 2, 3 that this is valid, right? So entry, exit, entry, exit, entry, exit. That's 3 solid trades based on this one pattern that you get in one single day. And this works on daily charts as well. So for you swing traders out there, daily charts, hourly charts, same story. Let me find one on a daily chart. Actually, kind of one forming right now. Oop, got me messing up all my drawings over here. Give me a second. Let's go find one here. Okay, I guess you could probably, no, right in here, here we go. Here's a good one on a daily chart. Sort of right in here. It's not the best example, but anyway, it does work on a daily chart. There we go. That's a great one right here. Trending this way, and we've got this series of sort of nice tightly consolidated price action. Breaks above on high volume, which happens to be earnings as well. Pulls down, retests, and then continues higher. And then there's another one up here up top on a daily chart. Right in here. Breaks down previous structures. So anyway, that's about all there is to trading triangles really. Daily chart, hourly chart, 5-minute chart, 1-minute chart. The pattern is the same. It functions exactly the same on every time frame. As we can see right here, here's a like sort of a rising wedge pattern here that breaks down, retests that area, and then falls down to previous structure lows. Any of these previous structure lows would have been a good target here. Same thing, same concept. That's not quite a triangle, it's more of a rising wedge there, but same concept for both patterns. You trade either the breakdown or you trade the retracement to the breakdown. Here's another good one. Sort of a same thing, another little triangle pattern, consolidating, and then pops up to previous structure highs before it starts consolidating. Look right here, this structure, that's where you start consolidating again. same story. Easy pattern to trade, really, really good trade to take and learn. But remember, key points, you must be patient and let things play out. You get in early, you get in late, and then it breaks the other way. Well, now you look silly because if you had just waited, you could have made a ridiculous amount of money. Anyway, hope this helps. See you all in the next one. Cheers.